What I've laid out today is simple. It's that the L1, L2 hub and spokes model is a winning strategy. It's going to grow to global ubiquity. It has the technical scalability, control scalability, customizability, and political scalability. It hits all the bases. The L1, the world needs it. L2s, the world need it. There's no other good option from a 60,000-foot view. But just because there's no other good option from a 60,000-foot view doesn't mean that if we don't believe in our own model and we don't believe we can grow enough to, use this great infrastructure we've built, or that if we're going to kind of foot around while our competitors, claim they're as decentralized as us and onboard all these companies that, maybe don't even understand the true risk they're accepting by being on these chains, it's like, that's like bad for us. Like, we need to agree that our strategy is a winner. And then we need to get out and bring the real world on Ethereum. And that's when we're really going to see the incredible gains against Bitcoin, against competitors, and obviously, ultimately in US dollar terms.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic. Today's show spotlights Ethereum investor Ryan Berckmans. In this episode, we discuss the surge in Ethereum's real-world growth and adoption despite market sentiment, what's being done to continue growing demand for Ethereum block space, and how ETH the asset can finally flip investor sentiment and convince major capital allocators to buy more ETH. But before we do, just a quick word from our sponsors who make the Edge Podcast possible. If you've ever wondered what financial freedom looks like in the age of AI, meet Newton, a smart, secure way to empower AI agents to work for you without giving them custody of your assets, for a world beyond interfaces, built for autonomous finance within your own tailor-made set of guardrails. Follow Magic Newton on X and get ready to try Newton soon. This episode is brought to you by SKALE, the next evolution in Layer 1 blockchains with a gas-free, invisible UX, instant finality, and robust security. SKALE allows for limitless scalability and has already saved its 50 million users over $11 billion in gas fees. Visit scale.space today and follow their journey on X at SKALE Network. Hey folks, I wanted to tell you a bit about our sponsor, PYTH Oracles, your go-to source for smarter data to power smarter contracts. PYTH delivers real-time market data for crypto, equities, FX, and commodities to over 80 blockchains. With 120 plus major market participants like Jane Street, Binance, and CBOE, PYTH ensures secure, low-latency feeds trusted by 430 DeFi apps. You can learn more about PYTH by going to pyth.network. And thanks to the PYTH community for supporting us here at the Edge Podcast and Edge newsletter. Overwhelmed trying to manage your crypto and DeFi investments? Meet iYIELD, a free financial planning tool for crypto natives and yield farmers. iYIELD's dashboard compares returns from your DeFi positions side by side, providing clarity to help you make better decisions. iYIELD supports a growing list of over 16,000 tokens and 40 of the top DeFi and staking protocols across 17 blockchains, including Ethereum L2s. The best part is that iYIELD is 100% free, anonymous, and there are no ads. Check out iYIELD.com today to take control of your financial future. Launching your blockchain in months? That's so 2020. Launch your network in minutes with TANSSI infrastructure. Restaked security through SYMBIOTIC, plus full customization just a few clicks away. It's 2025. Build smarter, scale faster. Visit tanssi.network to get started. Hey folks, I want to tell you a bit about our sponsor, HOURGLASS, the protocol unlocking liquidity for time-bound tokens. With HOURGLASS Boost, you can time boost your assets and earn time-bound tokens that maximize your yield. Alternatively, HOURGLASS also enables leveraged airdrop farming, where you can get over 150x leverage and 10% more points than anywhere else in DeFi. Plus, thanks to their slippage-free market design, you can secure bigger airdrops at better prices. To learn more about HOURGLASS, go to hourglass.com. All right, let's introduce Ryan Berckmans, an Ethereum community member and ETH investor. Ryan, welcome to the Edge Podcast. How are you doing?
Thanks for having me, guys.
Knowing you as a longtime Ethereum community member, you have a perspective both as an investor and as an engineer around ETH's roadmap, Ethereum, the network, its roadmap, and all that's gone into scaling and just all of the debates that have taken place over the years. It's a lot of nuance to sift through. And so part of our goal here today is to help folks who are less comfortable with that nuance to better understand what is working in the Ethereum roadmap and where there are legitimate debates and forks in the road in terms of like what's going to happen next. So I think a great place for us to start out is just talk about your experience with Ethereum. Like, what can you tell us about, like, when do you start to participate in Ethereum, and how has your experience evolved over the years?
Yeah, so I got involved in Ethereum about halfway through 2018 on a full-time basis, and I've been here ever since for about 7 years. I've spent some time in software development. I was on the Augur core team for about 6 months. I spent a couple of years building some payment software. And for the rest of the time, I've mostly just been a community member, posting, researching with a focus on ecosystem research in terms of where's this thing going? How are we going to get there? What are the strengths and weaknesses, opportunities and threats? And it's just been a real pleasure to watch Ethereum go through all these different phases of life stages. And, now we're sort of in a crazy teenage era. And obviously it's been a really challenging year for Ethereum, and I'm just focused on helping us navigate that and, be our best selves.
Ryan, we've talked a lot offline about this discussion, and I don't really have an agenda on where we should start. So I actually want to kick it over to you. Where do you want to begin here? What's kind of top of mind that you want to talk about most about Ethereum first?
More than anything else, I would like us to all recognize and see each other having that shared recognition so we can really kind of feel it, that our plan to have the layer 2 ecosystem and to reserve the L1 only for highest value use cases was an amazing plan. It scales the way the world actually works. It provides excellent technical, political, and product or business level scalability. It's really working out. Our main problem now, in my view, is that we don't believe it's working out. Too many of us aren't seeing that click, that big picture click. And I think that, there are some folks in our community who maybe occupy a bit more of a senior role that I'd like to see step up and say, guys, this thing is working. Here are our expectations. This is the strategy. This is the plan. Let's get to it. And right now, I think we're going in a few different directions, and there's different camps. The value accrual debate, and so I think we're really headed in the right track, and I want us to recognize that, and then go from there to pursue real world growth on Ethereum.
Ryan, can you expand on this idea that the L1 is more premier block space? It's more premium block space for certain types of use cases. Like, I think that anyone who's new to the space is viewing like an L2 and an alternative L1 as like the same thing, that like these are just different things I'm depositing into, or maybe they look at like, what does Coinbase, Binance, Kraken allow them to withdraw their assets and then deposit into like these different ecosystems. How would you dumb that down for folks? Like, what's the importance of the difference between those block spaces? And I think this will get into more of some of the misunderstandings around like the Ethereum scaling roadmap.
Yeah, so I think it's really a few things. So one, what is the value of decentralization? Vitalik had this great video a few years ago where he visited the home of Ashton Kutcher and Mila Kunis, and they were working on the Stoner Cats NFT launch. Great novel business model. It's the kind of thing we want to see more of nowadays with the winds, the winds changing. And Vitalik and Ashton and Mila, they did sort of a skit. And, decentralization is where everybody keeps everybody else in check. And that's a great, there's no one person in charge. And that's a great kind of retail level explanation. But I think there's another layer deeper, which is decentralization is about risk management. When a chain is maximally decentralized, it means that whatever you put on the chain, you effectively own, near perfectly. It's your personal sovereign property. And so if you're holding Ether in your self-custody wallet, or you're holding stables, it, besides the tokenization risk of, Circle's blacklist function or Circle's solvency, that is a very, very strong level of property rights. And to retail, this is a uncompelling argument. What does it matter? I got, a couple $100 in shit tokens. I'm trying a few different apps. Maybe my capital gets, into the thousands or tens of thousands. I'm fine on the Alt L1. I'm fine on, Hyperliquid. Well, okay, but the whole world's coming on chain, and they're going to tokenize, trillions of dollars in assets. And so the whole point of the L1 is that it turns out that we don't know how to make a blockchain that is extremely decentralized to drive that risk minimization and extremely scalable. So instead of sacrificing decentralization and thus making it less attractive to the very serious players, we're gonna split the focus. We're gonna have a layer one that's maximally decentralized, drives risk minimization for the strongest property rights pretty much in the history of the world. And then we're gonna have a layer two ecosystem that does everything else. And it turns out this division of labor is like a really, really great idea. And so that's where we're at, and that's why highest value use cases can thrive on the L1, where they want that risk minimization, they want that decentralization, and they want to be really, really close to other people who want it too. sort of, let's get an office on Wall Street because that's just our people, our industry, or where we're at. And so the L1, L2 division of labor is one of the most important ideas in blockchain. And, so far it's been very successful. And now we just need to drive better recognition of how that success is really building.
Ryan, on decentralization, I think it's hard for people. It's hard for people to even comprehend the value of it to begin with. So new entrants into the space. And then me, who's been in the space for, call it 8 years, I think it's even difficult to understand how much decentralization is needed. People talk about this spectrum of decentralization. I don't know that we've ever sort of quantified, hey, this is good enough, or this is way more than enough, or where we kind of slide on that scale. So I think you want to be maximally decentralized, but to what end? And this is something I grapple with. I wonder if you've been thinking about this yourself. Could there be better messaging around this, do you think?
Yeah, certainly there can be better messaging, and I'm very excited about organizations like Etherealize that are starting to speak in the language of the new institutional customers. I know you guys had them on the pod. When it comes to the value of decentralization, I think it's really a pretty simple argument that I'd really like to see us get out there. Step one, is on-chain compelling enough to rebuild the whole world economy on blockchains, on public blockchains? Yes, it is. It's not just like a step function improvement. It's a totally new economic paradigm, that's going to end up being as significant as the introduction of computers in the first place, or the introduction of the internet or mobile. The whole world economy is going to be rebuilt on chain. All right, that's step one. What's step two? Step two is, what is the value of risk minimization? Well, okay, if I have trillions in assets and 100 trillion in annual economic activity on some on-chain economy, what's the worst case loss? Well, the worst case loss is like an apocalypse, like a nuclear bomb going off on the chain. And so, do we want to minimize that worst case loss once the whole world economy is built on the blockchain? Yeah, we do. So what's step three? Step three is, how do we do that? How do we get the world ready to bring the whole, how do we prepare for the whole world to come on chain, the whole world economy, all the way from the country trade agreement level to the institutional level to retail, to retail in developing countries? How do we get it all on chain in the unified on-chain economy? Well, it turns out a really great way to do that is to build the absolutely most decentralized blockchain that our best minds can come up with. And it turns out that's Ethereum. That's what they've been working on. And yeah, the data bandwidth today is low compared to, high bandwidth, much more centralized chains compared to MySQL running in AWS. But what do you get for that? You get a level of reliability that's difficult to comprehend compared to competing solutions. And that reliability is not just any one metric that, sometimes you go to these decentralization like bake-offs and they show you a little table and it's got like number of validators or Nakamoto coefficient and I think what those debates often miss is that decentralization is how many guns to how many heads. It's a total top-level threat model of after we have the whole on-chain economy, the whole world's economy on-chain, how do we know that it's going to continue delivering on its commitments? And so Ethereum has just been totally obsessed with this idea, which we call credible neutrality. Credible neutrality is just maximum decentralization, which is the same thing as minimization of risk globally, like all forms of risk. And so we have incredible things like advanced economic analysis of our consensus protocol to make sure that it doesn't just operate well, for 99% of a decade period, but for actually 100%, those worst days. We're recording this on the first market open after the tariff liberation day. Like it's a rocky day. You can imagine a similar event like this happens in 3 decades when the whole world economy is on chain, or even 5 years from now, and you want it to run smoothly, right? The very serious people involved who have very serious responsibilities and very large amounts of assets, they want to know that here's the argument for why it's going to work. So we have great theoretical economic design. We have client diversity. We have protocol-driven development. And we have put together a package of benefits that make sure that when you put your money and you stake your business or your country or your town, your family on the L1, it's going to deliver on that commitment. So that's kind of the big idea and why it's so important to deliver that environment. Otherwise, the world economy can't come on chain. It's too risky.
So Ryan, with everything you just mentioned in mind, what are some of the early signs or metrics that indicate that Ethereum is winning, that this roadmap to scaling is working, but it's just a bit of lag right now, I think, for the mainstream in crypto to recognize how much Ethereum is winning?
Yeah, absolutely. So I think, KPIs are important. We want to be able to have 1 or 2 North Star metrics that we can point to and say, when these go up, we're winning. When these go up, our thesis is proving itself out in the real world. And Ethereum is in a hub and spokes model. The L1 is the hub and the L2s are the spokes. And so let's have one KPI for each of these. We got a KPI for L2s. We got a KPI for L1. The KPI for L1, I propose, is application capital, sometimes called total value secured, although it's important to get definitions right. When I define app capital, I'm talking about all of the customer money on Ethereum, which is excluding the native token. So what is all the capital on Ethereum, less Ether itself, as well as anything else that's basically wrapped Ether, like all the LSTs. So that's going to include in this metric, this total app capital metric, things like our top app tokens, including L2 tokens, which are our customers. It's going to include meme tokens. It's going to include stablecoins, real world assets. And a few times now for the last year, I've published a chart called the total app capital chart. And what it really shows is that in this North Star metric of app capital that is very hard to fake, by the way, unlike many other metrics in the space like active wallets or transaction count or volume. And then you take a chain and you lower the fees and you lower the latency, you get more wash trading. It's just math. It's just the wash trading, that becomes more viable. And so, which is, it's not to say we don't want fast and cheap chains. It's just to say there's a lot more to life than these metrics that are easy to misrepresent. But capital's so hard to fake. It might be the most unfakeable metric out there, right? Like we need a native token for proof of stake. So there's something at stake. Well, same thing for the customers. What is their money at stake that they've bet on Ethereum? And if you go and look at the numbers, the amount of capital on Ethereum, it dwarfs every other chain. And that is by far the L1's biggest win. So that's a North Star metric, the KPI for the L1. What is the app capital on Ethereum? Now, for L2, the North Star metric that I would favor, it's a little more nebulous. I think we got to find a way to button it up, is what are the number of L2s that pass some threshold of seriousness. So let's go and let's define a bar. And, that bar could include a lot of things. It could include engineering, business model diversity is a big one in layer 2. Like, is everybody trying the same thing, or is there actual genuine, people are going at it they're on their own mission, their own story, that they're building their own business case. So let's build a bar for those L2s, and then let's count the number of L2s that pass that bar. And then, we can have little satellite metrics off of there saying, all right, what are some of the KPIs, the capital on those L2s, the number of verified users, verified humans, maybe distinct product launches. Okay, that's all great. But to me, the L2 model is about this idea of three things. One, no one chain can scale enough for the whole world. Certainly not with credible neutrality. And two, the value of making your own chain is so you can control. Like, what is an L2? It's basically a really fancy L1 app that if you were to give an institution a lot of time to figure out how to make their own property, their own campus on the L1, and they say, all right, well, we're going to need our own way to control transactions or deposits or withdrawals or, with various levels of centralization or decentralization, what would really spit out of that would be an L2 SDK. So L2s provide the control that serious people want. And now the next thing they provide is the customization. Is I want to do something specific. I'm into video gaming. I'm into finance. I'm into every single thing that my country needs or my government needs. So customizability is a key thing L2 provide. And then the last thing, so I guess there's kind of the four, is the technical scalability. So, the world needs lots of blockchains. The world needs technically scalable blockchains. The world needs control and customizability, and L2s just nail this. So when we measure the number of L2s that kind of pass this bar, it shows us the L2 model is working as we predicted. So you get success stories like Arbitrum that has this incredibly serious, DeFi and gaming, probably the most decentralized, the most risk minimized, high scale L2. Like, if there was a chain you could point to and say, if you can't use the L1 and you care about risk, you should use this, you're probably going to point them at Arbitrum in today's environment. That's great differentiation. That's a great success story. But Arbitrum is also a crypto native L2 that's really focused on targeting, at least initially, the crypto native audience. And then you have all these other great success stories that have said, look, we have our own business case for L2s. We have Base, which is bringing ONCHAIN to their 100 million verified users. We have World, which has created a new way to verify humans, and they have now 25 million verified users. And they're bringing ONCHAIN to people who don't even know they're ONCHAIN. They're just using new tech. We have things like Redstone, which is an L2 using OP Stack and AltDA that is optimized for gaming. You know who's using Redstone? EVE Online, the makers of the most successful science fiction MMO in history. They're building like a cool new, Redstone Ethereum use case. That's just the beginning. At this point, there's got to be like dozens of L2s that pass that bar that they're really showing the L2 model is the best way for serious players to get involved in crypto. So yeah, those are the two KPIs I suggest. It's going to be the L1 app capital and the L2, how many L2s pass that bar that are like, wow, we got this great collection of L2s. And then obviously you can look at the growth in each L2, and there's some great numbers there as well.
Yeah, I like both of those. And I especially like app capital. That makes a lot of sense to me. And in this world of, fast and cheap will always win. I hear this all the time. I want to ask you, like, and not to pick on Solana, I know there's like a maturation process with all of this, but if everybody just wants fast and cheap, then why hasn't all the TVL migrated? Or why, and I know there's been outflows here and there. Money's always sloshing around for whatever new incentive is happening. But why does, Ethereum L1 and the L2 still command such a massive proportion of assets and TVL? What's stopping it from flowing elsewhere? And again, I acknowledge that it has happened to some degree, but if you look at, where things stand today, it's massively disproportionate. So yeah, what's your take on that?
It's very critical for Ethereum insiders to understand the true nature of our competition with Solana. And a lot of people like to push back on this because what's actually going on sounds like it's bullish for Solana, just at first blush. But you look one layer deeper, and actually what it is it's a way forward for us to successfully compete with Solana and retain and increase our dominant market share. So, what's really going on with Solana is that these guys showed up some years ago, and they said, hey, we have a new idea, a new tech idea for how to build an L1. We're going to use parallelization out of the gate, and we're going to use very large nodes and make a data center chain. And then they said, hey, we also have a new idea for how to grow an L1. We're going to vertically integrate our tech org with our business development org, and it's all going to be the same people, and we're going to do a lot of real world growth, as if we're a corporation growing. And that was very, very successful because the tech was really strong because, a few years back, there was no other place you could go that can do, 1,000 TPS at, very, very low fees per transaction. So Solana started with a tech advantage that they scaled with a vertical integration business advantage. But that's years ago now. That's seasons ago. What's actually happening now is that Solana's tech advantage is on the decline. They're not going to be the fastest chain. They're not going to be the cheapest chain. They're not going to be the chain that is the best integrated with the overall on-chain economy, because they're outside the Ethereum economic zone of all this, web of L2s. They're not going to be the most decentralized chain. Their tech advantage has been eroded by modern L2 design, such as base scaling up traditional rollup, such as Mega pushing the L2 model to its limits, and there's others too, like Rise, like Starknet. So Solana is not the fastest and cheapest chain 12 months from now, 6 months from now, and so it's not a tech advantage anymore. And so what is Solana's advantage now if it's no longer fast and cheap transactions? It's that more so than any other chain outside of Ethereum, they have built a real ecosystem, and they have a deep understanding of real world growth, and they have this humility to drive real world growth programs. They say, hey, look, we don't really know what's going to work. We have some ideas, so we're gonna be open and receptive, and we're gonna deploy capital, and we're gonna deploy capital in a way that is maybe a little more welcoming than somebody like Y Combinator. We're not just going to try to pick winners. We're going to help as much people as we can afford to. We're going to grow our team, our tribe. And, out of that are going to emerge some big winners. And of the ones that aren't big winners, well, they're going to stick around and they're going to believe in Solana, and they're going to participate in that political process of growing the squad. And so what Ethereum needs to recognize is that we have by far the best technology. We have by far the best decentralization, by far the best risk minimization. We have the best political scalability with the L2 model. We have such great infrastructure. But outside of our elite layer 2 business development teams that are excellent and are doing an amazing job and are, posting incredible wins and numbers and new product launches every day, outside of these elite L2 teams, we're not so good at real world growth. In fact, we don't even recognize it as being our primary opportunity. We tend to say, oh no, we're in this situation. And that you can describe that situation however you'd like. You can say, all right, the price is down. All right, nobody there's a question of whether value accrual is occurring. There's a question of whether the L1 is relevant in this modern world of scalable chains, which of course it is, as we discussed a few minutes ago. And so people have these questions, and then it puts them, they tend to say, all right, well, we just need another EIP, or we just need blobs to scale up, or we just need to deliver more mature ZK, or, there's so many infra tools we reach for. And it's just not, what we really need is to 100x, 100 times grow our real world growth efforts so that the number of serious L2s that meets that bar goes up by a factor of 100. And the amount of capital on the L1, 100x. The amount of L2 users, 1,000x. That's what we need. We need the real world growth. And that's really going to show people that Solana doesn't have a fast, cheap chain advantage. What they have is they have respect for the fact that crypto is here to help the real world economy. We're here to help real humans who don't even know what crypto is. And we got to get out and meet them where they're at and learn their stories and communicate with them and treat them like the customer. And, that's what Solana does well. And that's what Ethereum is really starting to do well now, especially with new L1 focused organizations like Etherealize.
MANTLE is charting a course towards a future of enabling crypto access for everyone, with major endeavors to build MANTLE Banking and MANTLE Index 4. MANTLE Banking means a new crypto neobank that helps users spend, save, and invest across their fiat and crypto finances, all in one account. MANTLE Index 4 is a tokenized fund in partnership with one of the leading tokenization platforms in the market. You can think of MI4 as the S&P 500 of crypto. To learn more, check out group.mantle.xyz, and thanks to the MANTLE community for supporting us here at the Edge Podcast and Edge Newsletter. There's also just been this headwind that has been the U.S. regulators, the U.S. government in general for years, and there has been such a huge regime shift. So for the past 8 to 10 years, we've been working with either a major sort of regulator that seems to be working against us, or has just not even acknowledged most of like what was going on in crypto. There was always like this threat of like, what if they basically stomp out the industry, and like what impact would that have on folks that are across the world who, don't live under the US government, but are clearly going to be impacted by these policies. So that's been now a major tailwind for us. And that's opening the door then to call it like new buyers of the Ethereum technology stack. So like BlackRock, the fact that BlackRock has $1.8 billion deposited on Ethereum mainnet. Like if you would have told me that 4 years ago, I would have, laughed at you and said like, there's no way, like there's just no way. That's a dream come true to get those guys involved in the space because they bring legitimacy. And so the legitimacy being vouched for Ethereum is there now. And so now there's others like Fidelity, I think, is launching some sort of like L2, or you'll have to remind us what's the latest there. But there was Fidelity, there's Franklin Templeton that's like super involved in the space now. And like this is just going to create a wave of other folks to follow because they're starting to realize that if you tokenize the hundreds of trillions of dollars in traditional finance, and by the way, we don't have to tokenize all of it. It's just as long as a small fraction of hundreds of trillions gets tokenized, that again just leads to more growth. And then, of course, you have digitally native assets, which will continue to grow as well. It's kind of like looking at the world of taxis, when Uber was first created and everyone, said, well, how big of a market is that? And like the truth was that new economy grew a brand new native economy to what was Uber. And so we've seen the same thing play out here with crypto over the years, specifically DeFi that is native to Ethereum and growing now on L2s.
The former administration was very hostile to Ethereum. They tried to shut us down in lots of ways. A lot of that was very successful. We saw, novel business models killed in the cradle, like Stoner Cats, using NFTs for capital formation for AAA media by famous celebrities to disintermediate traditional studios and, production pipelines so that you can have that the actors and the creators working directly with the audience. This is an incredible idea. You had something like fly fishing where they were going to use NFTs to raise money to start a restaurant. And the restaurant was going to be members only, kind of like a country club restaurant with NFT capital formation and then NFT property rights. So you want to buy a membership? Great, go pick one up on OpenSea. And these are such great ideas, and they came after us in all these different ways. Some of them more legal than others, the courts are saying. And that's very, very unfortunate, and it was un-American. And it's also true that during this same period, a lot of our technology was genuinely not there yet. We're not ready for a breakout app in the iPhone App Store that brings on 20 million users overnight. And now we are ready for that. There's this third thing, which is it top of mind? Is real world growth top of mind? Are we getting out there and running experiments and saying, well, maybe that could work. Let's go find out. Or are we sort of sitting in our ivory tower saying, well, I never thought that use case could work out, or, how are we getting out there and connecting with the real world? And I think that to a certain extent, to a very real extent, we've leaned on these crutches of a hostile administration and the infrastructure not being ready to absolve ourselves of our responsibility to get out there and connect with the real world.
Ryan, I want to zoom in a bit more on the RWA sector here. You had a nice tweet recently. It says, the dashboard from RWA.xyz keeps getting better and better. 7.2 billion in RWAs on ETH now, and 20x more if you include stables. Like some people call stables RWAs, but the majority of action in this space is happening mostly on ETH L1 and on the L2. So maybe speak to this, what you're seeing here, because right now this is a fairly massive lead, and I think a position of dominance that Ethereum would like to keep hold of.
Yeah, absolutely. We want to, we need to, and we will continue to win real world assets and stablecoins. It's true that stablecoins are technically real world assets, but you say RWA and folks think everything but stablecoins. They think gold, bonds, all kinds of things. So RWAs, like stablecoins, like payments, like lending, are only the first wave of use cases that have resonated with the broader business community and government community as being obviously much better than what they have today. And I would liken this to email in the 90s or getting news online in the 90s. Oh, great, I can send you a letter without writing it out and putting in the envelope and putting the stamp on. And it was an easy sell. And yet there was so much more that came later that was impossible to foresee, that even people who were super plugged in, who were like internet natives in the 90s, kind of these early cypherpunks, they didn't foresee it either, because it's this emergent creature that becomes greater than the sum of its parts. And there's actually an economic concept that describes why this happens, and it's called transactions costs. So when you think transaction costs, you think gas fee. But that's not what economists think. When economists think transactions costs, they think, what's the friction to get my job done? I got something to do. I got to drop my kids off at school. I'm going to go have a beer with my buddy. What's the friction? If my buddy lives 4 hours away, and to get there, I have to go through a long, dark tunnel that might collapse because it hasn't been repaired in 25 years. It's probably not going to be a great friendship. I'm not really going to maintain that because it's just too inconvenient. And it turns out that these forces of convenience, these little death by 1,000 cuts that add up through all of our transactions in life, not just our payments, not just our groceries, but our relationships and jobs and hobbies, that it's all shaped by the net convenience and risk available to us based on our particular position in life, our personal position in life. For example, I live in Cayman Islands. I use a reshipper to import Amazon stuff off Amazon.com to the island. Well, reshipper costs money and takes about 2 weeks longer. So what do? I borrow, I purchase net less stuff off Amazon. It's my personal situation. And so what blockchain does is it breaks down these barriers for assets, for ownership, for information transfer, for agreements due to the smart contracts keeping the commitments. And that puts us in a position where we have this first wave of real world growth that, all right, let's bring the real world assets on chain because there's instant settlement. Well, yeah, today, Larry Fink talks instant settlement and how it's going to create capital efficiency and unlock however many, hundreds of billions or trillions of value from instant settlement. Well, great. That's what he's talking today because that's the benefit they're focused on today. But this phenomenon of blockchain automating and making things cheaper and reducing risk and providing global connectivity, it fundamentally creates a situation where the whole of the on-chain economy is going to be so much greater than the sum of its parts. And so today, RWAs for instant settlement. Next year it's going to be, lending. And 5 years from now, it's going to be, all right, well, let's get that RWA into this exotic DeFi protocol that's going to model some like shipping relationship between two conglomerates that used to do it with a contract that was 200 pages long and, cost $100,000 in lawyer fees and, had no introspection or automation or alacrity to respond to world events. And so really the reason RWAs are so important is because they represent the bootstrapping of that on-chain economy phenomenon where the whole will be so much greater than the sum of its parts sooner than we can imagine. And so when you see RW growth, first thing you should think is, that's great. We're running real capital on Ethereum that serious people own. Let's do more of that. But the second thing you should think is, oh my goodness, what's going to come next? What are they going to do with these assets once they're on chain? Because coming on chain is the hardest step on a public blockchain. That was the thing that took the first decade of Ethereum's life. Once they're on chain, doing more with those assets and getting more mileage and yield and value out of them and flexibility and creativity and global connectivity, that's really going to be the next frontier for Ethereum. And so that's why it's so important for us to track these RWA growth, because it gets us closer to that next step of on-chain economy taking over the world, and Ethereum with it.
I totally agree. And one thing I'll call out too, you sort of touched on this, but I think it's a huge point. So with this move on chain, the efficiency gains are massive because, the Larry Finks of the world realized that, hey, maybe I don't have to hire 50 Goldman Sachs grads this year if all the management of this stuff has become way more efficient. We talk about, cutting out middlemen and all of this efficiency gains that blockchains bring. And I think it's massive for like admin overhead and keeping track of navs and position management that would have had whole swaths of, a whole floor of a high-rise building is probably just dedicated to that. So, not saying that's going to happen overnight, but in addition to the instant settlement, you gotta believe that this is a massive win for overheads too. And it's really exciting to see where this goes and just how much more efficient these businesses get. Because once they see that in the bottom line, there's no stopping it, in my opinion.
Absolutely. It's going to unlock a torrent of on-chain growth. Everybody's going to rush in on-chain. They're not going to be skeptics. They don't want to be left behind. People are going to be posting these incredible success stories about how much they've saved and how much more they can do. And that's why it's so important for us to grow the L1 with specific real-world growth efforts, because we want to bootstrap the machine, bootstrap the on-chain economy on Ethereum while the opportunity is still fresh, strike while the iron is hot. The world is waking up to on-chain, and we want that initial gold rush to occur on Ethereum, primarily on Ethereum. And it is already, but now it's incumbent on us to double down on it. And, that's what our competitors are doing. They're saying, hey, we got to get out there and meet customers where they're at, because whoever gets the first 100 billion in RWAs is much more likely to get the next 10 trillion. And so let's go out and capture that advantage for Ethereum with specific, directed, aggressive, real-world growth programs like Ethereum.
Okay, so if RWAs and everything related to stablecoin seems to be like the breakout use case / the like next sector that is super ripe for growth with these like institutions coming on chain, we have ultimately seen questions thrown around what needs to happen in order to like further fix, enhance, improve L1. And there's a few different like major network upgrades that get talked about, or like major milestones. So we don't have to cover all of these, but like the ones that were most top of mind is around blobs. So I don't know if you could just like dumb down like what's the story / debate there, and like are you bullish? Are you confident that like what's in motion is ultimately going to work out in favor of value accrual for ETH and Ethereum, the network growing demand? The other one too is Pectra. If you were able to touch on Pectra, like what it entails, and again, just bring it back to like, how does this lead to more demand? Like, how does this improve Ethereum's L1 network, and then whatever relationship it has with its L2s?
Absolutely. So first and foremost, we should not take the attitude, if we build it, they will come. The L1 roadmap is fantastic. And, Pectra is great and exciting. And the whole idea of blobs has been enormously successful and will continue to be successful. But we can't just build it and expect folks to come. We got to get out and we have to build those new app layer sectors. We have to identify sectors that could be low-hanging fruit, immediately promising, invest in them. It's not just RWAs. There's emerging things like labor markets. There's just so much opportunity in the app layer that we have to go out and seize and welcome and think of as a separate growth effort that needs as serious people and as serious a budget as the L1 roadmap. So that being said, the L1 roadmap is, in my mind, just fantastic. And, we're going to scale the L1, both in terms of the execution space where you can run smart contracts and the blobs, which is like Google Drive inside Ethereum L1. We're going to scale those as much as we absolutely can without loss of credible neutrality, maximum decentralization, because that's what drives the risk minimization that makes the L1 so special for L2s and institutional customers and governments. So yeah, let's scale it up as long as we're not losing credible neutrality. And we have the best researchers in the world working on these questions, and they've already delivered fantastic wins, and they're going to continue to do so. So in terms of blobs, it turns out that when you put like a data storage layer, like a Google Drive, in Ethereum with the same neutrality and decentralization guarantees as Ethereum itself, it really unlocks crazy amounts of scalability as well as crazy forms of scalability in terms of all the diversity of approaches on L2. And so this has been a great program. I think one open question is, will this make money for Ethereum? Yeah, absolutely. When L2s get large enough, we're going to see a natural partitioning of the on-chain market into three, really floor segments. So the first segment is alt L1s. It's the other guys. And then the other three are on Ethereum. The first is L1 apps, highest value, most risk minimized use cases that are willing to pay those, high fees that, were much higher in the past and will again be much higher in the future as we see L1s aping into the RWAs and other app sectors. And then the second, the next Ethereum partition is rollups that are using the blobs. These are the rollups that are trying to be, approximately as secure as the L1 itself. And if you look on L2B.com, they're doing a great job, but security is a complex story, and there's a lot of work remaining to be done there. And so the full rollups that use blobs are always going to be the most decentralized option, the most risk minimized option, after the L1 itself. And then the third bucket is going to be people who are settling on Ethereum, but they're using alternative DA solutions, which could be DA systems like EigenDA. It could be DA L1s. It could just be like the server in Dave's basement or like a corporate data availability committee. Could be anything at all. And we will and are already seeing a massive spectrum of data availability. But blobs are special because they're as decentralized as the L1. And so it's those three partitions that, the mental model there is that the L1 is Manhattan and, blobs are America and alt DA is the rest of the world, including the rest of the solar system. The amount of transactions, the amount of end user activity that happens that's settled on Ethereum but uses alt DA is going to dwarf, that uses rollups, and the rollups are going to dwarf the L1. And, I think there's some people who look at that today and they think, oh, that's bearish because we have an oversupply of secure block space. We're not going to raise any fees. People aren't going to believe in our growth story. That's not true at all. We just need to get out there and, pull the future forward by building out these app layer sectors. And so that we generate this demand, not through accounting tricks or artificial scarcity, but through what we came here to do, which is to help the world have better economic system.
Hey folks, I want to tell you about our sponsor, GEARBOX, the protocol that reimagines on-chain lending. With GEARBOX, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about GEARBOX, go to gearbox.fi.
Egg, a quite astonishing commodity. The cause of your desire. Egg, which fills the inner void. Egg.
Eggs are pretty epic, but you know what's more epic? Paying for them with crypto. Borrow, earn, and now pay with MOONWELL.
Say hello to Puffer UNIFI. Puffer Finance is expanding beyond native liquid restaking with new products such as UNIFI-based ROLLUP and UNIFI Pre-Confirmations AVS. UNIFI is not just another L2. UNIFI is a based rollup, one that will solve L2 issues, such as slow withdrawals versus instant withdrawals with Puffer UNIFI. Puffer UNIFI is fast, capable of sub-second transactions. UNIFI also has boosted Puffer points, which means if you bridge assets, you earn boosted Puffer points and rewards from dApps on UNIFI. Puffer's core products mean a bright future for Ethereum. Learn more at puffer.fi.
You're starting to key in on what my next question is, which is basically how does all this come back to ETH the asset? Because I think there's maybe a lag in price on the fundamentals that you're calling out here, and I hate to be that guy that's that meme pointing into the mirror and saying you're not wrong, the market's wrong, but at times you can feel that way. Maybe we'll flash the meme up so people know what I'm talking about, but it's one of my favorites, and I feel like that guy a lot because sometimes you can be looking at all this and listening to all this and being like, well, yeah, this is happening, but it hasn't been priced in by the market yet, or maybe it has. It's always hard to tell. But Ryan, what do you think? Like, if tying all this into the actual price of ETH the asset, what needs to happen for this future that you talked about could be pulled forward and packaged up? And I don't know if it's rolled up into a narrative and something easy to discern, but yeah, what needs to happen in your mind?
Yeah, I mean, the efficient market hypothesis is total BS. It's so much more dead than alive. Often the market doesn't know how to price things. There's a ton of real alpha lying there for those who can do the work. And for Ethereum, like in the COVID crash drawdown, like we dipped down to what, like $85? Like, make it make sense. And the answer is it just doesn't. It's just the prices are going to do what they're going to do. And, confidence plays a big role in price. And the reason that Ethereum is down against Bitcoin and down in absolute dollar terms, and that Ethereum's competitors, I think, are greatly overvalued in aggregate, is that even our own people don't agree on our strategy. So this, what I've laid out today is simple. It's that the L1, L2 hub and spokes model is a winning strategy. It's going to grow to global ubiquity. It has the technical scalability, control scalability, customizability, and political scalability. It hits all the bases. The L1, the world needs it. L2s, the world need it. There's no other good option from a 60,000-foot view. But just because there's no other good option from a 60,000-foot view doesn't mean that if we don't believe in our own model and we don't believe we can grow enough to use this great infrastructure we've built, or that if we're going to kind of foot around while our competitors, claim they're as decentralized as us and onboard all these companies that, maybe don't even understand the true risk they're accepting by being on these chains, it's like, that's like bad for us. Like, we need to agree that our strategy is a winner. And then we need to get out and bring the real world on Ethereum, and not just by chasing existing trends like RWA. Like, we're going to triple down on RWA. We're going to triple down on new layer twos and getting institutions and governments and companies to build new layer twos on Ethereum. But what about all the things that don't exist yet? What about all the other parts of the economy that aren't on chain yet? We need to take a more courageous and imaginative and humble approach to just seeing what's out there and building programs that are designed to let 1,000 flowers bloom and jump on reactionary trends that emerge, like AI agents, or cultivate proactive trends that were like, hey, this thing should really exist, but it doesn't. There are a lot of use cases that should exist on Ethereum that don't, And really, it's just because all of our top builders are like building the third or fourth restaking protocol, because that's where we lionize people. That's where we tell them that's where we signal that they're going to be valued both financially and in terms of status. So we're looking at the need and an ongoing culture shift to appreciate real world growth so that we can agree our strategy is crushing it. We can get out and tell that story to the world and rebuild confidence in Ether, the asset. Because it's not our strategy that's the problem. It's not our tech that's the problem. It's not our layer twos that's the problem. It's our need to say, all right, we really nailed a lot about our current situation. We got this great model, but we need to believe in it because it's working. It's working. And get out there and grow Ethereum and restore confidence in Ether. And that's when we're really going to see the incredible gains against Bitcoin, against competitors, and obviously, ultimately in US dollar terms.
Well said. I think that Kane Warwick said this recently on a podcast with us that, like, if you go back to 2020, 2021, if someone said to you, like, I'm bullish on everything that's going on with DeFi, and at that point it was all on Ethereum until maybe like 2021, how do I get exposure to this? There was a consensus. You bought ETH, and then maybe you got exposure to something like Aave and some of the other winners among the protocols. Now there's been an explosion of tokens that are completely outside of DeFi. Like I would still swear by it that the 30 million tokens or something that got created, I mean, that created just a lot of confusion for new entrants into the space. And it's the same old story. Like when you get into crypto, yeah, you can be drawn to building an uncensorable global finance settlement layer. Like there's all these things that still keep me up at night, and it is why I'm in the space. But yes, everyone gets into the space because they're like, it looks like an incredible machine for generating wealth. And so I don't blame folks for having, chased after those shiny objects. But we just saw all original sort of principles that drove the space get thrown out the window. And a part of that is because we have these scammy, grifty, VCs, anonymous investors out there who just continue to throw their weight into absolute bullshit while gaslighting us on Twitter. And so the problem is that we need this sort of return to folks wanting the original vision, I think, which is what DeFi was around permissionless, trustless finance that can happen in a digitally native setting that, eliminates the middlemen, allows you to circumvent any sort of KYC in institutions. These value props or those benefits are still what's actually drawing these new entrants into the space that are the major capital allocators like a BlackRock. Those guys see the opportunity to have markets run 24/7, to tokenize everything, to have it all be much more capital efficient. Believe me, the day that BlackRock finds out that they can cut their headcount by 50, 30%, whatever it is, they're going to do it. They're out for profits. And DeFi, even though it's got a beautiful sort of messaging around bringing people on chain who maybe got left behind by traditional finance, banking the unbanked, I believe that still follows in the years and decades to come. But for right now, yeah, the early adopters that are going to profit the most are going to be the folks that can do the work, be technically savvy enough to get on chain, whether it's an individual or an institution. And so anyways, my point in all of this rambling is just that there's been a lot of distractions. And thankfully, like with every bull run, the distractions lead to a euphoria, chasing after mostly garbage. But then when the dust settles, we tend to be left with still a net larger group of true believers, folks who buy into the technology, who have capital on chain and are going to stick with it. To your point earlier, the hardest thing is getting someone or an entity to put capital on chain. But once they've got it, why would you want to off-ramp that? Obviously do it for bills and, hopefully you can realize something joyful in your life in the physical world with some of that money, but there's no better place. There's no better yields, returns in the world to be able to realize that on-chain with DeFi.
Yeah, I love that long-term vision, right? Like, let's update the economic system. Let's change the world, and we'll do it through decentralization and cypherpunk principles, and we'll do it through more maybe mundane stuff like just good payments for people who don't have banking. And yet, when there's this old saying that there's only one kind of happy family, but there's many kinds of unhappy families. And in Ethereum right now, because we don't have this shared alignment around our strategy working, the hub and spokes is working. Let's go out, let's do the real world growth. Real world growth is a problem. Like that two-pronged realization that hub and spokes is working. Let's go out and bring the growth. We don't agree on that. And so in the act of our disagreement, everybody has their own explanation for, why the golf cart's not running. And one of those explanations you hinted on, which is that there's just too many tokens these days and it's diluting Ether. The L2 tokens are taking away from Ether. But from my perspective, you go back to the ICO days, shit ton of ICOs. You go back to last cycle when we did well, ton of long tail DeFi and food tokens, and there's always going to be a large selection of assets. And I don't think that the fact that there's this availability of a long tail of assets, that it's harming Ethereum's valuation. I think that as we develop the recognition that the plan is working, hub and spokes is working, and let's go out and grow in the real world, people are going to see that it's not like Arbitrum's fault or Polygon's fault that Ether's down because it's, fragmenting capital. Like, the problem is that Ether's not worth $2 trillion. You can't look at, 100 billion of L2 tokens or whatever it's at today and blame them for the fact that Ethereum's not worth, trillions more. So I think that, we need to get back to the vision of on-chain futurism and making the world a better place through all this great, technology and social, new social institutions. But also, let's kind of stop at the blame game of coming up with all these reasons why it's not working, because it is working. We just need to grow a lot more. So let's take some of our money and some of our status allocation and let's just put it into the app layer. And, a great example of this is DEF CON. DEF CON last year, great conference. And I mean, I was overwhelmed at the quality of DEF CON. I couldn't believe it. The venue, the teams, the programming, the little details, and yet virtually no app layer presence, right? And so there's been recognition of that now. And now DevConnect in Buenos Aires this November has been rebranded as the Ethereum World's Fair. So great. This is our first real foray into celebrating and focusing on the app layer. And that's the answer. So the answer is not to tell ourselves a story about infrastructure or the token landscape or Bitcoin or competitors. The answer is real world growth. It's really that simple.
Just understanding, with everything that's been said, who is the next most promising target buyers of ETH? If you're the Etherealized team, which seems to have taken up this mantle of they're one of the more accepted BD teams in Ethereum, who do they go after?
When it comes to growing that owner base of Ether, the asset, and how do we boost confidence in Ethereum? Because it's all about confidence, right? Bitcoin has no fees, Bitcoin has no apps. 99 point however many nines of Bitcoin activity is on centralized custodial exchanges, not exactly in the original cypherpunk vision. And yet their price is doing great. And they have all these net new buyers and, not just new dollars, but new kinds of buyers. They're achieving that kind of political scalability. And that comes from confidence. Confidence is infectious. And we have to play the situation in front of us, the hand we're dealt. And right now, that's all about institutional customers and institutional buyers. It's also about the next frontier of net new innovation for real world use cases in retail. So it's not But when it comes to owning Ether, the asset, what we want to see institutions buying it. We want to see folks who recognize where on-chain is headed and picking up some Ether because they see that as a great way to, not only participate in that future, but also hedge their own performance in that future. Like, if you're Visa, how do you know that you are going to be the winner of on-chain? Like, on-chain's going to win without a doubt. How do you know you are going to win it? Maybe you should buy some Ether to hedge the fact that while you're going to have competitive products, it's a tough market out there. And so, I think our biggest customers right now should be institutions that are already winning on Ethereum and saying, hey, BlackRock, hey, Visa, hey, Bitwise, like, let's grow your treasury of Ether because A, you know where this is headed and you're believers in it, you're early movers. You see your peers coming, the pack coming. And B, what if you don't do as good a job as you think you will on-chain? Maybe you should, create some downside protection for your own effort where even if Ethereum and the on-chain economy succeeds, which it will, what if you're not the primary beneficiary of that? So I think institutional uptake is where we're at in terms of the next Ether buyer. That's who should be buying Ether right now. And one way to measure that is the proportion of supply held in ETFs, which is currently much greater for Bitcoin than Ethereum. And I think that's really our opportunity.
I've got one final question for you. When you talk about institutional uptake or adoption, it's synonymous in Bitcoin with Michael Saylor. And I swear you had a tweet at some point, something like Saylor/MicroStrategy owns more of Bitcoin than I think what the Ethereum Foundation owns. Like it's something like 2 to 3% of Bitcoin, which, despite the often dumb narratives that get passed around on crypto Twitter, this is one of the dumbest. Is there's this assumption that EF owns a lot more. So that's a great comparison there. And I guess my question is have you thought about like what it would mean for Ethereum if it had this? I mean, I'm going to call him a crazed billionaire with an infinite bid. And like an insatiable appetite, a willingness to put all reputation on the line, never shy away from it. I mean, the guy like literally just wants to keep going levered long Bitcoin, no matter what market conditions.
Let's find one. Yeah, we absolutely want a Saylor for ETH. Saylor represents confidence. He represents a bid. He represents this strong personality that's in traditional media, that's getting out there and telling the story. Do I agree with his story? No, I don't. Do I think that the percentage of Bitcoin that he owns, which greatly exceeds what the EF owns of Ether, is healthy? No, I really think it's not. Is his like structuring of his long dated debt that, will he be able to afford to roll us over and pay it back someday? It's a crazy setup. But that being said, it's obviously been fantastic for Bitcoin. Like we need that for Ethereum. And I think the primary reason we don't have that is because, again, this lack of alignment among the Ethereum elite over whether our strategy is a good one. And one thing you'll find in Ethereum is very easy to throw a dart and hit an Ethereum person that owns material Bitcoin or material Alt L1 bags, not necessarily the other way around. A lot of the Alt L1 people, a lot of the Bitcoin people, they're mostly focused on their own tribe. And this diversification is a hedge for lack of knowledge. And once we improve the knowledge among ourselves as Ethereum people and among the public that Ethereum's killing it and that our hub and spokes model is going to grow to global ubiquity and the whole world economy is going to come on chain on Ethereum, and that, we have the best systems from, technical control, political scalability, perspectives, like that's when that bid's going to kick up. That's when you're going to see more corporate ETH treasuries, the Saylor of ETH, may or may not emerge, because right now it's a confidence issue, and we solve that issue with real world growth and with institutional selling into institutions. So let's get out there and get at it, because Saylor got into Bitcoin because he was confident. And then Saylor's confidence has created other people's confidence. So we have to get that positive reflexivity back. There's no way to do it but through real world growth. The good news is we are the best ecosystem primed for real world growth. Should we only invest in those programs and that talent and that, that high, make that high status to go out there and work on real growth and work on the frontier of the app layer. So let's not stop infrastructure. There's a lot more to do there. Let's not make infrastructure into second-class citizen. Let's just do both. It's time for both. And that's going to fix the bid. That's going to bring out the Saylor. That's going to send Ether to the moon, where it belongs as, one of the most important economic systems in human history.
I love what you're saying. It's basically, let's build our way out of this, this gap in sentiment. I think, as Kevin Owocki said in this one post, it was like demand go up equals number go up.
Yeah, I was a co-author on that.
That's where our strengths lie. Like that, continue to focus on real world growth, as you put it. But I think this is a great place, guys, for us to wrap up. So I want to remind our listeners that they should follow Ryan Berckmans on X or Twitter. We'll put that into the show notes so that they can easily find you and follow you. If folks want to get in touch with you, Ryan, any other recommendation? And otherwise, thank you so much for being so generous with your time. This was a great conversation. I think I needed to hear the way you framed up a lot about the value prop and the wins and successes behind Ethereum and, what's next? I think the key takeaway from all of this is okay, so what happens next? What is needed in order for demand to go up so that I think this lagging number price can also go up? But yeah, anyways, any other way you'd recommend for folks to get in touch with you, and any other final word for us before we go?
Yeah, folks are welcome to DM me on X, and let's get out there and grow real world Ethereum with institutions, with existing retail sectors, with new L2s, especially with new app sectors that could become surprisingly important, and we don't want to let those take root in other ecosystems. This is our time to shine. We have everything we need, so let's just get at it. And thanks for having me on the show, guys.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.